You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done for professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 8th day of May, 2019. Thanks for joining us. So glad to have you here. Whoever you are, wherever you are, thanks for joining. Now, I have a chart up of the S&P 500 Emini Futures.
There you go. There you go. Thank you.
I got it. All right.
Okay.
Thank you very much. All right. S&P 500 Emini Futures. If you can't see the chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. And on the days when you find yourself out of the office, away from the desktop, not to worry, just use your cell phone or tablet or whatever internet-connected device you have and go to youtube.com/CFRN/live. There you'll find our live real-time simulcast during the show each and every day, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, S&P 500 Emini Futures. We're going to move quick. Garrett is supposed to join us today at the bottom of the half hour. Haven't spoken to him today, but that was the word yesterday. Let's jump over right now for a look at the numbers, and we'll come back and we'll talk about all of this and what's happened. There is some breaking news out there. China, this came out about 15 minutes ago. China has promised to take necessary countermeasures against the U.S. if Washington follows through on its threat to increase tariffs on Chinese goods Friday. The Chinese Commerce Ministry said that Beijing will retaliate if U.S. tariffs on $200 billion of Chinese goods is hiked to 25% from the current 10%. Now, this breaking news comes on the heels of President Trump's tweet this morning, which said Beijing officials have informed the White House that the Chinese vice premier will lead the country's delegation, and he's coming to the U.S. to make a deal. White House Press Secretary Sarah Sanders later reinforced Trump's tweet, saying the Trump administration has received indications, in quotes, from the delegation that they would like to make a deal. Well, I hope they want to make a deal. I mean, we've been trying to make this deal for some time. The precise indications conveyed by the Chinese were not immediately clear, and Sanders did not offer further detail. Trump's declaration that Beijing is looking to strike an agreement also followed an earlier tweet from the president in which he claimed to know why China backed away from the negotiating table. Trump said China is hoping that if a Democrat is elected president in the 2020 election, the new administration will abandon his aggressive trade rhetoric. You think? I don't know. All right, let's look at the numbers from around the world. These are cash markets. We'll start here in the U.S. The Dow currently up 12 points. NASDAQ down 5. S&P 500 right at the flat line. And the Russell 2000 the same. In the commodity basket, crude oil up 55 cents, trading 61.95 last. That's about a 1% gain for crude. And gold down $3.50, trading $12.82 last. In the Asian markets at the close, the Nikkei down 321 points on the session. Shanghai lost 32, and the Hang Seng lost 359 points. For the Nikkei, that's a loss of 1.5%. For the Shanghai, a little over 1%. And for the Hang Seng, 1.25%. In the European markets, the FTSE finished the session up 10 points. The DAX up 87. And the CAC up 21. No movers or shakers there. It was a red day in Asia, green day in the UK, and here at home, at the moment, with the exception of the NASDAQ, it's a big green Radio Wednesday. So there you have it. News from around the world, numbers from around the world, and the S&P right here, coming off this marvelous little head fake. As you can see, the CFMA1 has turned up. It's blue and climbing. Price just below the BBC. And each time we've come down, this thin blue line has acted as good support. Question is, what will it do right here, right now? This is a bit of a make or break type situation. These zones, I think some are this week, some are last week. It's a mishmash, a hodgepodge. I'll get them all squared away and straightened out for you. And at least by tomorrow, I'll have you up to date on all of this week's weekly trading zones. A reminder, CFRN partners and passport holders receive the weekly trading zones every Monday morning at 6:15 a.m. Eastern. I share them with the audience at large every Thursday. But if you want to have them in your inbox every Monday morning at 6:15 a.m. Eastern. And give us a call, 949-42-EMINI, or send us an email, support@cfrn.net. We do have a webinar tonight, 8 p.m. Eastern, Crypto Portfolio Builders. Start building your crypto portfolio today. Compared to the internet, we're still in 1995. If you could go back to 1995 and know what you know now about the internet and the internet boom, then what would you do different? Okay? This is the biggest financial revolution in the history of money. And crypto is rapidly becoming the future of money. So if you want to learn more, if you feel like you're crypto confused, just come tonight. We have a Wall Street professional who will share information with you that will demystify the crypto space. All right? I'll see you all tonight at 8, and I'll be back in a few minutes. Let's go to Michael right now and get a recap of everything that happened in the live training room today.
Okay. Here it comes. All right. You should be looking at my chart.
Indeed we are.
Okay, it's 12:20.
I don't suspect Garrett will be on time, on the money, so
Okay.
just, take your time. Do what you got to do.
All right. Well, I gotta.
I know.
Yeah. Okay.
All right.
All right. I'll just get going then. All right. Good afternoon, everybody. Today is Wednesday, the 8th day of May, 2019. What you're looking at right here is our homepage. Now, if you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Right over here, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page, where all we ask for is your email, your first name, and how you found us. Click the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. So you got to click that confirmation link. Okay? Okay. Spreadsheet. Had a pretty good day this morning. We did stop out a couple times, but we did have some good trades as well. The ES was really active. We'll get into that in just a few minutes. But if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 8th day, as I said, of May 2019. Today we lost 8 ticks on the euro. We made 3 ticks on crude, and we made 26 ticks on the ES to put us at plus 305 on the morning session. Today it took 3 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 11 trades today. 3 minutes and 1 trade. I like that. Today, so far this month anyway, we're up $890. That's over 6 days, and we're averaging $148 a day. On the year now, we're at $9,430. That's over 80 days, averaging $117 per day. Now, keep in mind that it's one contract, 2 hours per day. And what we want to teach you to do is to add contracts. Be consistently profitable and add contracts. Okay? Not go for 100 points. Okay? Okay. Now, gold. We did nothing with gold today. We didn't have a single trade on gold. The closest thing we had to a trade setup was... we didn't have anything close to a trade setup. If you were doing the Tuesday trades, there was a long trade right here. There was a short trade right here. There was a short trade right here. A short trade right there. A short trade right there. So if you're not familiar with the Tuesday trades and you're a partner and you have access to the indicator set, you should go check it out. Okay. And this week, the Tuesday trade is going to be a Friday trade because I have meetings all week in that time. Is ES at 10:05:47 valid slingshot short on the 4-tick range? Hang on, I'll get to that in a few minutes. Okay, I'm going through this right now. But we didn't have anything on gold. On the euro, we had one stop out right here. There was also a bounce off the BBC right here that we missed. And during the break, there was a shorting opportunity right here. Now, not knowing where the low of the day was at that point, it might not have been a shorting opportunity. But this right over here would have been, for sure. Okay. On Crude. What did we end up with Crude? Okay. On Crude, we picked up 3 ticks on this long right here. It was a momentum long trade. Then we missed this one, and we missed that one, and we had a break even there. Okay, and then this is all during the break here. There was a shorting opportunity here. No, I'm sorry, the black step line was up above. Just looking to see if we had anything here. No, it just got really choppy. I mean, it's a slow grind down, but the slingshot wasn't going to let you have anything in the slow grind stuff. It's going to keep you out of the trades. But we ended up with +3 on Crude today. So far we're -8 on the euro and +3 on Crude. Now the ES, and I'll answer your question here at 10:05:47. $10:05:47. No, because the entry right here, that's 10:05:59, and you're looking for a short at 10:05. No, there was no valid short there. This was 10:05:29, but the down close was right on top of the MA1, making it a momentum trade into dynamic support that had not been broken. I think. Well, maybe it had been broken. Yeah, maybe it had been broken, but I didn't highlight it, so there was a reason I didn't highlight it. I don't know what it was. I'm pretty sure the reason was that it wasn't trending. Okay, so we started out this morning. I mean, in this, the ES was just, it had a lot of movement today. We started out, we put our first trade on 3 minutes into the day. Well, actually less than 3 minutes into the day. And we picked up 8 ticks on that. That got us our goal for the day right there. So we picked up 8 ticks there. And then we picked up another 6 over here to put us at +14. We missed a long trade right there. Too bad we did that, but we did. Then that was at +14. Then 2 more here to put us at +16. And then we stopped out here, put us back down to 8. And we missed a trade there, right there. We picked up 4 ticks here to put us at +12. We missed a short there that would have been good, a short there that would have been good, a short there that would have been good. And then we picked up 2 more ticks here to put us at +14, 2 more ticks here to put us at +16, and then 10 ticks here to put us at +26. And now let's see, during the break, before the break, there was one more shorting opportunity right here. But lazy, it wasn't, I didn't think it was trending at the time. That's why we left that alone. Okay. And over here during the break, there was a shorting opportunity right there. And a shorting opportunity, nope, not trending. A shorting opportunity here during the break. And then a long opportunity. Not there. Yeah, a long opportunity right there. Another one there. And a shorting opportunity. I'm just looking at what the trend line would look like. Would have been right here. Okay, and then a long opportunity would have been here with that leg up. Okay, so there was a lot of opportunity today on the yes, and we ended up with 26 ticks this morning. Okay, so with that, let's bring this back up. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 8th day of May 2019. We lost 8 ticks on the euro, made 3 ticks on crude, and say that again? Yeah, I thought I heard something. And made 26 ticks on the ES. That put us at 305 on the morning session. Today it took 3 minutes and 1 trade to get to the goal for the day. At that point, we're at $100 per contract. And we took a total of 11 trades. So on the month now, over 6 days, we're up $890 per contract. And on the year, we're up $9,430 per contract. That's over 80 days, averaging $117 per day. Okay, now, I'll go back here. If you have not taken the free trial with us, and you want to take the free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. Click on that, and you'll be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. So you must click on that confirmation link. All right? All right. That's it for the morning session. Yeah, so we can pass it back out to Studio A in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
And I am.
Excellent.
Alrighty. Here we go. Okay.
There. Good. All right.
All right. See. Okay. Recap of the recap.
Today it took 1 trade and 3 minutes to get to the goal for the day. We're up $100 per contract at that time.
That's a good bingo.
You should get 2 bells. It's 3 minutes. I love it when we nail it on the first trade.
Dose bells. All right.
Yes.
All right. Price battling it out right here at the BBC, the CFMA1. We had what appears to be a head fake to the upside, and we're just waiting to see if the market's going to follow through to the downside. The fact that the market didn't come unglued with this latest bit of news out of China, there may be some hope for this thing to turn itself around. I guess we'll have to wait and see. Okay, I know you got to run, so I'll bid you adieu.
Okay.
Whatever that means.
Okay. Yeah, adieu. Adieu.
Oh, is that French?
Right.
That's French.
I think it is.
It must be.
I think it is. I think so. John's not in here yet. I don't know if he's coming in.
Yeah, he should be here at some point. And Garrett should be rolling up momentarily, if he's not already here. I think he comes in with a hot mic, right?
Yeah, usually he comes in the staff section. The hot mic.
Yeah. Okay. So I just spoke to him a little bit ago. He'll be here momentarily.
Okay.
All right, buddy.
Good.
Thanks.
Good. All right, no problem.
Okay. This chart I have up. Well, let's just see. All right. 28. Oh, yeah, we want to take a look at this again because we can. Okay. Right. Yeah, let me back it up a little more so you can see the whole thing. There we go. All right. Going back to April the 12th. We put in a high, we put in a low. That in and of itself, no big deal. And then what happened, after we put in the high and the low, we put in a lower low, yeah, but then we put in a higher high. And that began this pattern here. We're not pattern recognition people, but some patterns it's hard not to recognize. And when you have this unfolding, it can be quite dangerous for trading, especially if you're not aware that you've got this going on. Some call it a megaphone, some call it a bugle, a funnel. You can call it anything you want. It's perfectly okay. When we got, now it was after we put in this low that we could connect these two lows, and after we put in this high, we could connect these two highs, and then we're back down here to test the low, back up to test the high. You'll notice we skirted outside of it, just a little bit. Get all this old stuff out of the way. And then we hit the top again. And yesterday we hit that lower trend line. Now, looks like a pretty good bounce from here. You can't make this stuff up. It just is. If you're not drawing trend lines, lots of trend lines, I encourage you, start drawing them. Your charting package should come with an unlimited supply of trend lines, and don't worry about getting them perfect, okay? And when price dances outside for a minute and pops back in, don't let that concern you, all right? Just start drawing them over time. When you walk in, and forget you ever drew a trend line back here, and then all of a sudden price does this and bounces. Now, yesterday I kept saying on the show 2870 is where I thought it would connect. It may have been more like 2869 or even 68. And we bounced 30 points. Now, that is officially a higher low. All right. Now, how long could we stay inside of this? Well, as you can see, with each passing day, it gets wider. And so we could be in here for an extremely long time. All right. So buckle up. We'll see what happens. Now, we're just on the verge here of getting a bullish cross. Hasn't happened yet. Now, we had a little head fake last night, right? So 54.55 is this week's lowest weekly trading zone. Above that, 97.98. Above that, 23.24. And above that, okay, just get rid of some of this stuff. We don't need it right now. All right, 23.24. Then above that is 38.39. Come on, 38. And 39. Okay, those are today's only Wednesday, but hey, it's a good Wednesday. So coming off the Globex Open, that must be Garrett.
Look at you.
Welcome to the show.
Thank you. How are you doing?
Good. This is something you might identify with or can appreciate. Going back to April 12th, we put in a high and a low, which became this pattern here that some call a megaphone. Some call a,
yeah.
What do you call it?
I'm one of those. I'm a megaphone guy.
You're a megaphone guy? So we've hit the top a number of times, and we hit the bottom for the third time yesterday, and then bounced 30 points. I was just explaining to the folks, you can't make this stuff up. It just is.
Yeah, it's pretty wild. Do you think we've finished the megaphone there?
I don't know. Well, we're still inside of it. So, give me your take on it. I'm not a pattern recognition guy, so my understanding is rudimentary at best. What are your thoughts?
On the megaphone, or where we are?
All of it.
Or both?
Anything you want to talk
about.
Well,
I think megaphone patterns are very valid. I mean, that's why they got recognized and got named. You know, you don't get a name unless you earn it somewhere along the line. So I think what it's doing is showing the expanding volatility. And this market, every bull market has its own characteristics. They're all very similar with respect to greed and fear, but each one has its own characteristics. And this bull market, I noticed, had a characteristic, the .com, it was, the tech's going wild and the greatest valuation of all time and things like that. And this one had a couple of personalities. I mean, during the Obama years, Obama was really handed a gift. I mean, he might have been handed the greatest gift of any incoming president ever. And people would say, well, what do you mean a gift? I mean, he walked right into a recession where there were serious problems and people were losing their homes. And I'm going, bingo, thank you. Yes, exactly. Right. He walked into a bottom, didn't he? He walked into a bottom, and it was such a situation that, gosh, if the economy couldn't save itself, via its own strength, then we'll have the Federal Reserve do everything possible. So not only do you have a great situation, I mean, it's significantly better than walking into the top of a boom. I mean, let's say you walk into the best boom of all time, or you come into office in 2000, and you've got this, the most overvalued market of all time. I mean, that's horrible. What are you going to do for an encore?
Well, where do you go from there, right? Yeah.
I mean, you're almost assuredly going to be a one-term president unless something else is going on. But anyway, he walked into the best situation possible. Not only did that happen, he had all the support of the Federal Reserve and, of course, the globalists. And they gave him QE. And they gave him zero interest rate policy. It just doesn't get any better. And with all that, he single-handedly, ruins the manufacturing industry and the coal industry and a few other things, and can never get a quarter where he has growth of 3%. I mean, that, Republican, Democrat, I don't care what anybody is, doesn't much matter. They're all just a little bit different color, but he just did a horrid job. And so that was the first part of this bull market. And yet the market went up because, we came out of a horrible oversold situation. Then Trump comes in. And arguably, I mean, I think you can make the argument that the bull market that we had from 2009 to 2015, 2016 went up. And you kind of go, why did it go up as much as it did? I mean, did the economy do anything to warrant that? No. Yes, it turned around from what could have been a collapse, and you get a pretty good rally out of that. But in reality, did we really add much to that? And it's like, no. So, I mean, I think the market got a lot more credit than it deserved going into when Trump came in office. Then Trump comes in office, and for whatever reason, the market turns around. I mean, whatever reason, I would hope would be that whether you like the guy or not, this is an experienced businessman. This is a man who knows how to negotiate. This is a man who understands the economy. I mean, this is a significant difference than the guy before,
A world of difference. The guy before, his job, the only job he held, or the one that we're familiar with, was a community organizer.
Excuse me? I mean, you know,
Yeah.
and I mean, and I hate to say that, but if that's all you can put on your resume, then you're a guy who's never had a job, because that's not a job. I mean, what is, you know, a community organizer? What is that? That's a nice phrase for, you know, being an anarchist in a, you know, in an anarchist organization. Period. I mean, the guy's a Saul Alinsky follower, like Hillary Clinton, like Bernie Sanders. And boy, I had a great thing to show you, and I mean, I wish I could. Let me see if I'm.
You want me to send you the charts over?
Yeah, but give me just a sec. Let me see if I can find. Oh, doggone it! I wanted to share this with your audience because it's. I mean, I think I've shared the quote from the past by Aldous Huxley, but this one goes back even further, and you know, I've saved that and put it somewhere. But let me see if I can find that. If you don't mind, talk to the folks for a moment
Sure.
on the S&P, and this is worthwhile if I can find it. Give me just a moment, because I want to share this. So
All right, yeah, take your time. Find it. We'll be here.
Yeah, go ahead and fill them in, and let me see what I can find here.
Okay. Hey, John, welcome to the show. You there?
Yeah, hi.
Good.
I was just listening to Garrett there. Unfortunately, I missed some of it. No, look, actually, taking what he said, you know, George Bush did a pretty good thing, being able to get reelected after coming in at the top of the 2000 market. Still did pretty well. And he's right. I mean, Obama did walk into an opportunity that few presidents get. You know, he was coming in the worst market ever, just about, and you know, there was certainly a lot of upside. So he was lucky of that. But you know, as I explained to people a couple of days ago, the real reason why the market is where it is today is because of Trump. Deregulation. I mean, it's a trifecta. The money coming back from overseas, the deregulation, and the tax cuts has created a fiscal paradise. And you know, I was actually going to comment on this. I was going to put some things out on Twitter. You know, obviously a year ago and a year and a half ago, back in January, the first rumors of tariffs increases certainly created the market in the early days. And you know, what's happened is there's a tendency, in fact it's even happening today, there's a tendency for a negative reaction at the mention of the word tariffs, and then it stabilizes a few days later, or in the worst case 5 days later, as in the case of the first 5 days of February 2018, and then the market rebounds, you know, dramatically. And today, you know, even though there's still a reaction when tariffs are mentioned, it's pretty short-lived, and it's kind of glossed over because, believe it or not, over the last year or year and a half, certainly the investment community's gotten the memo that tariffs are actually a pretty good thing, and they're achieving a lot of objectives that probably wouldn't be achieved if they couldn't put them, if they didn't have them. And this sneaky kind of negotiation that's been going on with the Chinese, where they basically change the rules in the middle of the game, or tried to, you know, Trump is not having any of it, and he's happy to put the tariffs on, really much heavier than before. And since China's in all sorts of trouble already, this is really going to it's going to crater the Chinese economy in a big way. If that happens, they may lower the yuan, which is one way to counter it. That could create a bit of a trade war, but I don't think they want to go there, and I think they want to get with the program. You know, they want to get with them. So I think that the ability to you know, and Trump's not caving to the Chinese in any way, shape, or form, or anyone else for that matter. Now, last night, this smart aleck on CNN, Golden Lemon, who's probably not everybody's favorite guy, maybe the exact opposite. Yeah. But, he was going on and trashing Trump. I mean, here's a squirt who has somehow got himself a show on CNN, for what that's worth. And to some people he does okay with it, but for him to go into a hate-filled rant about Trump and calling Trump sort of the worst investor of all time and this sort of thing, worst businessman ever. I mean, look, Trump, people don't understand the crash of '87 was a really big deal, and the crash didn't really hit the real estate market until the early '90s, when you had the savings and loan crisis and everything else, and it was a brutal time for anybody in real estate. And Trump over leveraged himself, in the late '80s, and got himself upside down in a very big way. But the question isn't, I mean, there's always total disregard for what Trump's achieved since, with his 600 companies and the quality and status of his hotels and his brand, and the trophy properties that he has all over the world are just, I mean, would anybody not want to trade places with Trump today? Even the richest guy in the world probably would trade places with Trump just to be president as well. So this guy's reached the pinnacle of everything, and that's of course brushed under the rug because they're bashing him every which way. But more importantly, in the same way as Garrett was just talking about the moral strength and experience of a president, I'd rather have a president who's been beaten up in the business world and came back from being $1 billion down, more than $1 billion down. I mean, that's a phenomenal accomplishment in and of itself, don't you think?
It really is.
What he had to go through being $1 billion underwater, and was able to kind of, with bravado and a bit of hype, was able to kind of get by it and still come out on top. I mean, that's the real story of Trump. And, he's gone from minus $1 billion plus to plus, a lot of billions. And he's still, he is, as I've said before on the show, he built a phenomenal building, Trump Tower, in Midtown Manhattan. He was first in, he's one of the early developers who really built a phenomenal building, and that was his kind of anchor. But he also, and you probably know this story, I mean, listen, he bought 40 Wall Street for $1 million.
Yep.
When nobody wanted it, and it's worth about 500 million today. So, that was one of his best deals ever. And he bought that 40 Wall Street, when at the worst point. I mean, I think he was down $1 billion when he bought that property. So, he really did an incredible job. And he's, what he's put together since, and how he's done everything, including annihilating, the best candidate lineup ever in the Republican Party. And not only that, listen, the guy has the highest ratings of any president in the Republican Party ever right now, and has maintained that pretty much through his presidency. That's a phenomenal accomplishment. And he's shaken up the Republican Party in a huge way and said, listen, if you want to remain in power, you're going to have to be the party of the people, not the elite, like they used to be. Would you agree?
I agree.
Absolutely. By the way, I found that
I see it
thing,
up on the screen here. Yeah.
I didn't know which of my screens that you get. Let me get that little reminder there.
And Garrett, by the way, you're dead right. I mean, coming in at the top of, look, the market was down in 15, 16. It was off the highs, but to come in at the top of a boom and extend it into the greatest boom ever, and listen, by my math, it's really Trump's career. I mean, what would you rather have? They're bashing him and saying he's the worst businessman ever. But you know what? He just pulled off the greatest trade of all time. He's increased the U.S. net worth by about 15 trillion.
By the way, John, was that when you mentioned a CNN program last night? Would that have been Don Lemon?
Yeah, that's the one. Yeah.
Can you imagine can you imagine what would have happened in the news? I mean, this would have been the greatest thing of all time. If you had Hannity or somebody talking about, somebody coming on and just trashing Obama, a white guy trashing Obama. I mean, they're immediately a racist. I mean, right now, whether somebody's a racist or not, that's the label. This person is a horrible racist, but Don Lemon, nobody's calling him a racist.
He's the worst of all. He is.
I mean, he really is the worst of all, and he gets off scot-free. In other words, I guess if you say something about white people, and particularly white males, and heaven forbid if they have blue eyes, I mean, you can say whatever you want, and nobody seems to have a problem with it. It's just fine. In other words, it's okay to be a racist, because that's what that would be under these terms. See, this is why I want freedom of speech. My deal is, let's be able to say whatever we want to say about anybody. If somebody doesn't like it, guess what? You don't have to like it. And if somebody says something really stupid, well, enough people will pick up on it, and they'll get them out of the limelight. But this is why you need freedom. I mean, what we have here, if and I know you've noticed this, is what these Democrat socialists are doing in the process of taking away our rights, is they're taking away our rights, but they're keeping theirs. In other words, they have freedom of speech. It's an incredible situation on this supposedly liberal thing. But this is what I wanted to show you. I just found this. Now, my other thing is that comment from Aldous Huxley, which I think is priceless. It was done in 1962, and he just laid out exactly what has happened in the world today, as if he had prior knowledge, which of course he did. But this says, are you paying attention yet? It was all part of their planned takeover of America. And now we go, well, what planned takeover of America? This says, keep in mind, this was said 73 years ago, a quote from 1944. And by the way, that's now 75 years ago, isn't it? Mm-hmm. So Norman Mattoon Thomas, born in 1884 and died in 1968, was a leading American socialist, pacifist, and six-time presidential candidate for the Socialist Party of America. The Socialist Party candidate for president of the United States, Norman Thomas, said this in a 1994 speech, and listen to this. The American people will never knowingly adopt socialism, but under the name of liberalism. See that? Liberalism, of course, the funny part is, and they said this back in 1944, liberalism. Now, it's not really liberalism. The liberals are the conservatives. And they say, well, gosh, how can you say that? And I said, well, if I'm a conservative and I choose to be a vegetarian, I eat vegetables. If a liberal does it, they want to outlaw meat. If I'm a conservative and I don't like guns, I don't buy one. A liberal doesn't like them, they want to outlaw them for everybody. So that's not liberal, is it? In fact, it's intolerant. So the liberals are really the intolerants, but I think this gentleman and the other people who were doing the planning of this situation thought, gosh, if we name the party honestly and call ourselves the intolerants, well, who wants to be an intolerant? But liberal, that's nice. That's kind of like petting your dog, right? I'm a liberal. And you think, boy, what a good thing that is. Well, it is good if you're truly one. But anyway, liberalism. They will adopt every fragment of the socialist program until one day America will be a socialist nation without knowing how it happened. He went on to say, I no longer need to run as a presidential candidate for the Socialist Party. The Democratic Party has adopted our platform. There it is. That's in 1944, and 18 years later, Aldous Huxley made his comment, and we've got this history going all the way back. You can point to it. You can show it to a liberal, and I still haven't found a liberal yet who's read the Rules for Radicals, which is what their platform is. I mean, what they do, one of those rules is, blame the other side before they can blame you. For example, if you're Who's the most deplorable person we know? Really?
Well, you're
Hillary
probably
Clinton.
thinking of Miss Clinton, but that's for
Hillary
you to say,
Clinton.
not me.
And what does she do? Now there's a gal, I'm going to give her credit. She read the rules for radicals and she knows it. And she's the one who probably was the most successful at introducing this into her party in present times. One of those rules, which she learned very well, is, she's deplorable. So before anybody can call her deplorable and despicable, she labels the other side. What are they? Well, they're the deplorables. And therefore, you can't go back and say, no, Hillary, you're deplorable, because she's already played the card. I'm sorry, the card's already on the table. Don't call me deplorable. I called you deplorable. And what did they do? Take a look at the election with Trump. If you're a Democrat, a socialist, and you're smart, you look at the situation and you see that Trump won. What do you do right away? What could Trump accomplish after he stopped the missiles coming over from North Korea? But what could Trump accomplish that would just make him a shoo-in for 2020? I mean, in my view, the thing that you really have to stop is stop him from becoming friends with Putin. Because right now we've done through our news media, we've made our old ally, Russia, from World War II, we've made them our enemy. And ironically, they're essentially a predominantly white Christian nation. So, I mean, we choose to befriend, these other Muslim nations over a nation that used to be our ally. And one that Edgar Casey said way back that would be the nation that would lead the world to freedom, not the United States. What if Trump had forged a friendship with Putin and we started to trade? They've got natural resources we need. We've got technology they need, whatever, and all sorts of other things. What if that were to happen and you were to have a very positive relationship between two leaders and we opened up a friendly relationship with that country? All of a sudden, the two big fears for this country, unless I'm sadly mistaken, are Russia and China. What if we become very friendly with Russia and open the door to become friendly with China rather than all this war stuff? You notice that Trump's not a warmonger. For some reason, he hired Bolton, which I completely don't understand. To me, that's a serious mistake. But anyway, that's just my opinion. But if he were to have done that, he would have taken away not only the threat of North Korea, but the threat of Russia. And heaven forbid, what if we haven't became friendly with Russia? I don't hate anybody in Russia. I don't buy into all this other stuff. To me, it looks like they're kind of like we are, a superpower. And heretofore, we were going out doing manifest destiny all over the world, and they were trying to do it too. And now, maybe both parties have become, if we get the globalists out of the way who love war, we could have a really good situation. So what do? They bring up the Russian situation. In other words, they played the deplorable card before we could play it. Before Trump could go out and do something, they completely eliminated him from doing that, didn't they? That's what this was about. It was about eliminating Trump from going and creating a friendly relationship with Russia. First of all, the globalists, that's the last thing in the world they want. It's like, well, God, who the heck are we going to go to war with, for crying out loud? And how are we going to make the money that we make off of wars? Anyway, I just wanted to share this. I thought it was interesting, and I think it's important to read rules for radicals, because this is the platform and the format for everything that the Democrats are doing. And I feel sorry for the Democrats who were, Democrats and not socialists, because this is something I think that's going on that they're really not aware of. But if they read rules for radicals, and if they had 2 or 3 neurons that were still firing, then they would quickly see that, oh my gosh, this is the platform of my party. I mean, this is exactly what they're doing actively now and what they've been doing. And I think that would wake a lot of people up. But unfortunately, the news doesn't report the news. There's an agenda out there that's been going on for a long time, and I think people are starting to realize it. I was going to show you a couple of charts, and I didn't get a chance to put them in here. One of them, do you see this other screen, or do I have to drag that over like that?
Yep, you got it. Yep, now we can see it.
Okay. This is, now, by the way, one of two things is going on here, unless, of course, there's a third alternative. But I think the two main viewpoints on what's happened since this December low here and the high that we had a week or so ago. May 1st, sell in May and go away. Look at that. But what had happened is we've got this market that's had extremes here a little bit with perfect 1, 2, 3 points with a shot in the middle. It did it again here with 1, 2, 3 points coming up to the upper channel and a balance point in the middle. And then we moved into this rising wedge. And then we broke out of this, popped up to test it, and then failed. And the question here is this an ABC? For a near-term wave 4? Have we, the big picture, I think that most people are looking at, and I'm looking at too, is that this is a wave 4, a big wave 4. We're in this final fifth wave, which could go out for quite a while, but this is only wave 1 of that first wave. And if that's the case, and John, I'd love to have John's opinion on this too. If we topped here, I mean, this could be a wave 3, it could be ABC 4, then we could be going up to make a wave 5 somewhere up in here, and then have a correction. But
Right.
this is a big wave 1. I mean, unless it's a B wave, but yeah, let's deal with this being a wave 4, this being a big wave 1. When you have your correction for wave 2, it will come in an ABC, and it should be. I mean, in normal cases, you get a 50 to 618 retracement of a wave 1. Now, this is so strong, maybe you probably should get a 50% retracement when that's over. What do you think, John?
I think you had to
I
take
think
it.
so.
There he is.
I'm here. Sorry, I just got back. I think that, look, it's tried to nip this in the bud. As a matter of fact, yesterday afternoon, we caught the lows. I had a feeling we were going to have a late rally, and it came in. And, the news about the China deal back on is helping the markets go higher right now. So
According to China, it's not so much back on. They just put some news out about an hour ago.
Yeah, no. Trump tweeted out a couple of hours ago about that, saying that they're coming here to make a deal, and
they fired back and said if you raise it from 10% to 25% on Friday, there will be retaliation, whatever that means.
Oh, they already said that?
Yeah, they already said it.
Well, that's the downside. If that happens, I guess,
John, what do you think of they've been discounting this since the Christmas low?
Yeah,
I mean,
I said that there's a lot of upside value built into this, and if it comes apart, it'd be very bad for sure. I mean, it would be. I think it would come back very, very strongly. Very like you say, a 50% or easily from here. And pretty fast,
Yeah, I mean, so whenever this ends, whether it ended there, this could be a little ABCA for an A, and then we get a B, and maybe we get a big C.
The C would be devastating. And look, we are actually kind of tracing out 87 a month later. It's the correction in 87 started in April. Looks like it started in May here, so we're about running a month behind. And that probably means that, the rest of May is very tricky, maybe going right into the middle of June. And there's a lot of reasons for that. There's, the European elections coming up, and, could have a sort of a late summer rally start around middle of June, and then we could really go up a lot after that. Maybe they work out something by then, if they don't fix it before the end of the week.
Yeah, that's what I was kind of wanting, John, is let's get a correction in here, and then have, because then I've got a date out there in August, and again, it can move a little between now and then, but I'm assuming it would be a top, but I'd look for a strong move too. But I'd sure like to see that correction first. I mean, if we just have a minor correction here and then get a strong move, number one, I don't know.
Well, if we did resume this uptrend from here, that would be quite positive, quite bullish, and might take us over 3,000 on this next leg. But we'd have to take out yesterday's high to really, put in a decent reversal here. This little up move so far is not convincing enough to, it's if we come down, something happens tomorrow or Friday, and we take out today's lows. I mean, forget about it. I think this thing could really go down a lot from here, maybe 1,000 points or more, even in a day, and that's what happened in 87.
Yeah.
And remember, in 87, 1,000 points was a big deal. So,
real big deal.
Yeah, that was that.
That one day waterfall decline day was down. What was it? 502, 506 points, something like that.
Yeah.
Big.
Yeah, sorry. I'm thinking about 2000. In early April 2000, we had 1,000 point down day when we were a lot lower, and that was a big deal back then. So, but we had a consequent. We had that was about a 10%er, and we had a 10%er in from about the first few days of April into the middle of April. We had about a 11% correction actually. Yeah, we had an 11%er down, a 12%er up, and a 13% down after that, and then we took off to the 30% upside move into the summer, and we could do something like that right now. We could. The market could even go up and fail. Go make a nominal new high and fail, and then come back again. A lot of things could happen. So, I mean, you called it right. You called it. I've mentioned you a few times on the show, Garrett, that you called it a few weeks ago. That it was, with the sentiment and everything else.
I was going to share that. I had just a couple of charts to share with you, and then I'll get out of the way. But what I'll do is I was just kind of looking at this. I was trying to get some other charts. By the way, on the chart that's already up there, the big question to me is this a wave 3? I mean, starting from here, is this a 1, 2, 3? It certainly looks like it to me. And then you get maybe an ABC 4, and then a 5 somewhere up here, 3,000, as John was saying. And then if that's the end of wave 1, if this isn't, then I think it would be something like that. Then you get a 50% correction. The other thing that a lot of people think is that, well, if that isn't the case, this is an A wave, and then wherever we finish this, whether it's here or out here somewhere, is a B wave. Then you get a big C wave for the wave 4 that would be here, and that would be probably test these old lows. So anyway, that I just brought that up because I think that's what most people are looking at. It's one or the other. Unless it's something else, right? But I was going to say,
while you guys are on that topic, Richard from the audience shared this. He believes the top is in as of May 1st, or we have one more rally to complete wave B, of an A, B, C, D, E contracting or expanding triangle. Any of you guys' thoughts on that?
Actually, I'm glad he brought it up because I had
Yeah.
seen that, and in the case of a rally up to a new high, and then failing, that would pretty much complete that 5-point reversal, is known as, and that could be a devastating formation as well. So
Wouldn't that be interesting if it was an A, B, C, D, E? That's a very intriguing thought. Let's see what I had here. This was that April 23rd observations, and I had at that time, it seemed like the bull, of course, had been going on for quite a while, but hadn't been quite as robust and was taking a nap. Joined the bear and kind of taking a nap, and that's the one that I was talking about, the cycle of emotions. Just the cycle that we go through, and that we were, kind of up in here. And then I thought I'm going to turn this into something more of a pictorial type of a look at what happens, what the feelings are at these various times. Back in January, that move, you had a year without a 3% correction. It's never happened. And you had everybody going, I'm the smartest trader ever. I could do this in my sleep. And then this happens, and you get the feeling is, oh my God. And then it comes back, and then it comes down again. It's like, oh my gosh, this just isn't right. What happened to our bull market? And then coming back here, now you've got volatility back in the game. You've got up, down, up, down, up, down all over the place. And the guy, these up and downs are driving me nuts. Then you come back up here again, you make the new high, and this guy's back. I told you there's nothing to worry about. This market's going much higher. And then we get that sharp decline again, and it's this little guy. And then you get the volatility again, kind of like over here, and then drive it down with gads make it stop, and then holy crap, we're going to zero down here at the bottom, and now we're back in, and at this point we're where we were was higher. The guys were the loony bird section, and then I brought up in that thing, there's an old stock market adage that says, don't confuse brains with the bull market, and way too many people make that mistake. This is a long-term thing that I keep, and partially to let me know whether we're in a wave 3 or a wave 5. Wave 5, wave 3 should be your power move, and your buying pressure here should be higher in a wave 3 and should drop down in a wave 5. And that's why heretofore this looked like a wave 5 over here in 2007, because the buying pressure was significantly less than in 2000. And I think that might have been your orthodox top if you didn't have the Fed come in, and that might have been our top there had we not had the Fed and zero interest rate policy and all that other stuff. But anyway, I think that made that a B wave, and this is C wave, and that a big 4 down there, at the 2009 low. Then we come up, and you've got this, and I'm expecting in 2015, this is it. We come down, we go up again, we get lesser buying power. That's wave 5, and this baby's over. Well, we got more buying pressure. So that's not wave 5. That's most likely a wave 3, and then we've either had our wave 4 or this is an A, B, and then we get a C, or as the gentleman said, a D and an E. So it's one of those. And so I put this in there, but I noticed the purpose of this chart, other than that, which is what's the big picture look, but the other purpose is here we are at a higher high. This September, October high is higher than January. This high is higher than either one of them. And back on this other one, we had a divergence sell in October, and look where we are down here. I mean, talk about a divergence. We're at a higher high and a lower thing. And then I looked at this other indicator here, and it's all the way down too. So, and then had made this comment. Let's see, I've got to, how do I get that over where we can see it? Well, not very. I guess the answer is not very well. Apparently,
I can see it.
What I had said in there is this is what was in that April 23rd thing. I think that John was nice enough to mention. I said today the S&P closed at a new closing high with the McClellan oscillator in negative territory. The last two times that occurred was in January of 2018 top and the previous all-time high in September of last year. Sentiment readings are again over 91%. The volatility index is very near its lows for the year. The put call readings are quite low. Volume is relatively low. Relative strength on the S&P is now higher than it has been since the January 2018 top. As of last night, there were about 30 technical sell signals. Now, what does that mean? On a batch of about 1,000 stocks, ETFs, and indexes that we follow closely that are liquid, about 30 of those came up with technical sell signals. Back in January of 2018, you probably had 300 sell signals, and in the December low, we had over 300. This one, we've got a rotational market and a lot of stuff going on, but it just kind of shows that that's, some sells are finally coming in, rotational market or not. It's interesting to note that the big cap stocks of Apple, Amazon, Microsoft were on that list. Many other tech stocks and indexes and ETFs were on the list as well. So anyway, that's what that was. This is the bull taking about the stock market and the bear on the side, and the director's going, nope, not yet, stick around. Let me see what I had. I just wanted to see if I had anything else. Here's this stock market. Here we go again. The other thing that I had to show you was more of a big picture thing that I was just taking a look at. Surprises aren't always fun. I started, I thought it was kind of time, and I think it's premature for this, but it's certainly not premature to think about it. And that's my old standby comment that every 40 years or so something bad happens. Every 80 years or so something really bad happens. So the 80 years is, the revolution. It's the beginning of the American Revolution, and I don't mean wars, but economic peaks. The Civil War, then another 80 years, the 1929, and now we're due again. So it's what this is a bad recession, depression cycle. Every 40 years or so, a bad recession. That was, of course, 73 and 4, and that didn't really recover until really 83. You had a 16, 17 year lid there where you couldn't get over 1,000, and it finally came back in 83. So while you had the top in 73 with Nixon and Watergate, and then that terrible recession. That recession took a while. That took 10, 11 years to come back from, to regain. Of course, the depression took 25 years. So that's the deal, though. It's time to kind of be watching that. And what I thought was kind of interesting here is this. This is Goldman Sachs Bull Bear Market Risk Indicator that has about 5 indicators in it, and lo and behold, this got up to 75%. And if we look at that, That's higher than it was in 2007, higher than it was in 2000. And you've got to go back to early 1966 and late 1968 to see those type of readings. And what were they? Those were the warnings of the prior 40-year decline. Now we've come up here again, and now we're at another 40-year period, and the 80-year period, and here we are again. And lo and behold, this indicator is now moving up to, these are bad. The two new millennial tops, 2000 and 2007, big corrections and bad. But this one says, you think that's bad? Stick around. So we need to be aware of that. That was the point there. This is what it looked like before.
Hey, Garrett, I'm not sure we see the chart you're referencing right now.
Oh, you know what? I'm sorry. I didn't. I need to do this, don't I?
Yeah.
Yeah. Thank you for letting me know. Nice to. I forgot about that. I'm looking at it on my screen. My apologies. This is the one I was referring to. This is the Goldman Sachs Bull Bear Market Risk Indicator. It's got 5 different components. I don't know what they are. Mm-hmm. But the key was early 66. And again, we're coming up from the 1932 low and the 1933 economic low in the economy. So we're 30 some years out forward after a huge move from 1949 up to 66. Basically kind of these 17-year cycles. But all of a sudden this happens, and it's like, watch out. And even though we hadn't had the 73, 74, that's what this is warning about, 73, 74. And so somebody, astute guy, could say, hey man, you're in 1966 and you're alerting about 73. That's way too early. And I go, yeah, it is. But when this happened, what happened afterwards? That happened. That's a decent move. And then it came up again in 68 saying, oh, by the way, if you weren't paying attention about this, late 68, it's like, watch it again. It is warning of something bigger to come, but what follows right from there? That. So they're pretty darn good warnings. If they're not the big one, granted, they're not the big one, but if you paid attention to those, it would be okay. Now, here's what they look like in the market in reality. This is that 17-year period. I used to call it 16-year period from 66 to 80 to 82. But in reality, you didn't get out of this lid of 1,000 here that held the market down for a 16, 17-year period until early, this I believe was February of 1983. When you finally broke above this. And then using closing prices, even with this signal, going back to the prior chart up before this, then when it finally came on in 66, what if you took that signal to heart and said, oh boy, this says something really bad is going to happen, and I'm going to sell my chips. I'm going to turn my chips in. I'm going into the money market and make whatever you made back in those days. I mean, in these days, you're making 15%, okay? So, man, I'll tell you one thing. Over here, you're making a lot more than you're making today. So what if you got out there? I mean, would you have been, how bad would it have been? Well, on a closing price basis, which is what this chart is, the market over this entire period never went 4% higher than right there, including 73, which was the peak. This is not 4% higher than that. It's almost 4%. But you would have made 4%. What were interest rates, John, then? If you're on the sidelines, what, 6, 7%? I got to go back and check. I forget. I can tell you what they were in November of 1981, but again, most of the time you're looking at being able to get 6 or 7%. If you couldn't have got it there, you could have got it in utilities. So you would have made you would have had to, just to get to here. You're looking at 7 years. You would have had to wait for 7 years to make this 4%, and you would have been making 150% of that year after year after year from selling out here. I mean, you could have gone on a 17-year vacation and jumped back in the market here. So what I'm saying is that when you're looking at these things, this is significant. When you're up here in this 80, 90% level, this is telling you something big. I think we're on our way to that over here. I think we're going to get another one of these. And probably when we do, you can probably do the same thing. You can step out of the market and invest it and make absolutely nothing, because now the criminals have decided that money's worth zero unless they're charging for it. In other words, these banks, what do they charge you on your credit card? Well, if you let it go for a while, they'll charge you 30% if they can get away with it. And what do they pay you in the bank? I don't know, what, 1/4% savings? What is it now? Nothing, right? So I looked at this and I thought, this is a pretty substantial thing. It's confirming my every 40 years or so concern, and I'm a little early here, and unless we topped. But I went back here, and this is unemployment, and this lighter blue line is unemployment, not counting long-term unemployment, because because we've got lots of long-term unemployed people now that they don't count anymore. So look at this. This is confirming back in 66 and 68, right there, just like the other one. You're getting a confirmation here in 2000 and 2007. Again, you're under the line here. And look where we are here. This is saying that, once again, not only are we this is saying this is more critical than 2000 and 2007. And by the way, this is saying the same thing. This is more critical than this or this. And these were big. I mean, that top, if you were in tech stocks, was an 83.5% correction from peak to valley in your NASDAQ 100. So you're looking at a huge correction there in the market of choice. The market of choice over here was the S&P 500, and that's 57.7% in the S&P. So you had two huge ones here, and this one is saying, just wait. Watch out. And is there anything that confirms it? Yeah, this is confirming it. This is way down here. You're down below this lower line. Were you there in 66 and 68? No, back then, where you were higher in the Goldman Sachs bull bear, this time you're even lower than that, and you're down challenging back here in 1953-54, which was a totally different era, and good reason for full employment. You just you just finished World War II, and things are coming back in a good note. So anyway, that's my 2 cents worth. It's more big picture stuff. And that's all I've got, gentlemen, but I'll bet you John's got a whole lot of good stuff. So,
well,
hey, Garrett, thanks very much.
Just heard this morning from a friend that I think Casey's put out a big report, or somebody related to Casey, saying that he's expecting the biggest commodity boom in 50 years right ahead. And that makes sense. I think right now, I think the S&P CRB ratio is the lowest that it's ever been, and something's got to give. And I think as I've been saying for a long time, the 30 trillion or so that's been pumped into the economy over the last 10 years is going to result in a massive resource boom that's probably started in 2016 and may get reignited here very soon. I think within my timeline is in probably the next month now, before the dollar breaks, and just the same way as it did in '87.
Okay. All right. Well, Garrett, thanks so much for popping on today.
Well, thanks for having me. It's always
really
fun to catch
enjoyed
up
it.
with you two gentlemen.
Yeah, I'd love to have you every
Thanks
Wednesday.
very much, Garrett. Great input.
So,
And it's going to be interesting to see what happens from here on out.
yeah, it really is. Longer term, the cycle says deflation. I mean, as far as an ultimate outcome, and the fact that, it's really going to be interesting. I think the safe thing to do is to follow the cycle and the expectations and all this stuff. But part of me is holding out because there's big cycles coming together. I mean, this is one of those rare times where there's just a lot of meaningful cycles coming together. The 40-year cycle, we're approaching that. And by the way, that was a pretty perfect cycle. If you take the economic low in 73 the economic low in 33 when the banks closed, and you add 40 years to that, you get 73, and that was the peak. And again, you have to not just add 40 years on to that and say, oh, we should have topped in 2013, your cycle's wrong. I'd say, well, wait a minute. I said, remember we had that 16 to 17 year plateau period. So you really have to count from the end of that. You can count from the 1974 low, or you can count from the 82 low, or you can go in between those. But arguably, I think, you kind of look at it from where you broke out, either at 82 or so, and that gives us a little bit of time for this market to go up before things kick in. And you've got the depression cycle, you've got the three of those being a revolution cycle, and with the situation going on with socialism in the country, that's there. And then you've got some very big cycles. I mean, the Mayan calendar cycle, and then the precession of the equinox cycle. And of course, we can't even talk about those things because nobody's been around. Those are things that, in order for cycles to make sense, you have to have a lot of history on prior cycles to make those calls. And we don't even know what happened there. But for me, what I'm kind of holding out for is, what if this was a large evolutionary cycle, and where normally you'd go into a depression or something, maybe something really good happens coming out the other end. So I'm holding on to that in hopes that if a lot of us can think that way, maybe we can make it happen, because if so, it would be I think a lot better than what the long-term big picture cyclical projection would be. Anyway, again, I already had my 2 cents, so that that's a half a cent or whatever, but that's my fingers crossed thing. So anyway, thank you so much for your generous time, and
thank you for joining us. We appreciate it. Another comment from Richard in the audience. He says he believes the K-wave winter, which is deflationary, is not finished, but has just postponed by QE. The debt burden will at some point will probably cause a crash and a bigger deflationary and not inflationary until a much later period. I
would agree completely. And the difference between this cycle and in the 1970s, late 1970s, for example, is that one happened when it was supposed to happen. In other words, you got your runaway price and your movement in gold and so forth. Huge move into January of 1980, and that's when that was supposed to happen. And you had money on the sidelines that could do that. People were moving into real estate and hard assets, and your tax rate was 50% at that time. So you had benefits from real estate and taxation. You don't have a lot of that anymore. You still, with all the good work that Trump has done, you still have a large percentage of this population that's one paycheck away from insolvency. and the debt. So I agree with Richard. Did you say was his name?
Yes, Richard.
Yeah, I think Richard's on the money there. I like his ABCE idea too.
Yeah.
By the way, that's certainly a potential. I think the C wave would still be a pretty good a pretty good wave, and we'd have to see what happened at that time. But the nice thing about an ABCDE is it says that, hey, we get a fifth wave, and if that's the case with an ABCDE, this bull market, I would think, would extend out into 2021, probably, with that type of a if it was an ABCDE, because it extends you out in time a little bit more, and the implication is for a pretty meaningful fifth wave. So I'm in favor of that. I hope he's right. So anyway, well, again, thanks again, and look forward to our next visit.
All right, we'll talk to you next week.
Good. Nice to talk with you, John.
All right, John, you got anything you want to cover? Okay. I think John's on the phone. All right. Last night on the ES, so to consider being short 28.88, and we put on a swing low down here. 28.68, call it 28.70. It's about an 18-point decline. Important prices, important areas, almost always tested. Price gets back above the trigger, and we drop to 28.76. Back above the trigger, we drop to 81, and we're back above the trigger. Maybe about to drop below that once again. Important prices, important areas, almost always tested. Good word for the day. Reminder, webinar tonight, 8 p.m. Eastern. The link's in the chat box. Diversity. We hear a lot about diversity today. We live in a society where diversity is at the forefront of so many things, social, political, you name it. Galatians 3:28 says, "For you are all one in Christ Jesus." If you limit yourself only to people who think exactly like you, you'll never grow personally or accomplish what God has in mind for you. You need people who have 20/20 vision where you have blind spots. The way to offset your weak areas is by being able to work with people who are strong in those areas. Instead of looking for those who conform to your opinions, you need someone who loves you enough to challenge your opinions from time to time. Why? Because we all have a lot of learning and growing to do. Think of the people that Jesus picked. Luke was a doctor. Peter and John were fishermen. If you prided yourself on your image, which would you have picked? But Jesus needed them all to accomplish his mission. He knew we need people who complement us, not duplicate us. There's an old saying, anytime two men in business agree on everything, one of them's not necessary. It is estimated that even if you had the genius of Einstein, you'd still know less than 1% of all there is to know. And if you were mega talented, you'd only be able to achieve less than 1% of what can be achieved. Now, we need harmony, but there's a difference between harmony, which is derived from two or more distinctly different notes that blend together, and unison, the same note made at the same time. Harmony is far more appealing to the ear than unison. So your relationships should be harmonious without being in clone-like unison. Think about it. You are uniquely different from anyone else. So if you want others to love and accept you, then start loving and accepting them. The greatest wisdom is found in diversity, not conformity. And that's our good word for the day. Again, webinar tonight, 8 p.m. If you didn't grab the link out of the chat box, just send an email to support@cfrn.net or give us a call, 949-42-EMINI. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.